Alrighty, let's see here. Get rid of that boxaroo up there. And it's going to be another short video. Now, I made a video yesterday. I think it was yesterday, or was it Friday? I don't know. It's all a blur. But I talked about these fast market events that are highlighted in the red and the green. And I also talked about what they mean and how to utilize them, especially when they're back to back. Okay? What I'm going to talk about here, though, is how you can use these areas to find what possibly could happen in the future. Now, this is a 6 range chart. You see up here 6 range. That's why all these candlesticks are so uniform. It's all I use, range charts. And this is the hogs again, okay? Because today is Sunday. It's bacon day. You know, my wife will say that every day is bacon day for me. Where's all the bacon that I made yesterday? I don't know. Check the dog's breath. They probably got it. But anyway, I want you to notice something here. We had a bipolar moment here, but you can see that there are, about 4 candles in between what happened here. I had this green here, where that means that everything went off on the offer side and nothing was happening on the bid side. So that's bullish. And then within, how long is that? About 15 minutes. Yeah, about 15 minutes, a little more than 15 minutes. We had a red that went off, and right smack in the same area. So you draw a couple lines there, and you kind of make sure it's green, it's red, so that you know what those lines designate, which are going to be the green and the red. Okay? So let's scroll forward here and see what we get in the future. Now, there has to be a relatively sharp distance between, you can see, came back up there, couldn't break it, came back up there, nada, and then boom, the next day we gapped down and it got its ass kicked. But this is one of the ways that you can use this and use the fast markets for determining things that may happen in the future. Now, theoretically, we could draw another one right here, couldn't we? Right? We've got green, we've got red. We could draw another one right smack here. But I didn't, because I want to go over to this one. Sorry about the scrolling, kids, but there's nothing I can do about it. Come on. Okay, so there's another one. You know what? Why don't I just do this? Let me try this. We'll go boom, boom. Come on, get there, baby, get there. Time is of the essence. Oh, shit, I'm going the wrong way. See what happens when it's a Sunday? You lose your sharpness. Especially when you've got a belly full of bacon that you just blame the dogs on eating. It didn't work, by the way. She knew. She always knows. Women have excellent intuition. You know that? Okay, here we go. Now I can quit giving you stupid little quips. Okay, so now we've got red here and green here. So we draw those little lines right in there. And we've got, what, 53, about 15 minutes again in between these two. 15 minutes. I might want to write that down. I might want to use that as a benchmark as to the amount of time between these areas and only mark those. What do you think about that? 15 minutes. Okay? All right, so what happens here? What happens here? We come down and we chop around and we chop around. We break down below it, but look at this cut. right? And we come back down there again, and we chop around, and we chop around. How long did we chop around here? 12:35. Oh, look at that. What was that, about 20 minutes? So once again, we come back down again, get above it, get back below it. You see what I'm talking about here, kids? You see it? Are you seeing how this can help you to see things into the future? And when you put other combinations of things in place, like right here, we've got a divergence. We've got a divergence here, both positive divergences. I mean, obviously, you're not going to take this. This is the last fucking 5 minutes of trading. Pardon my French. But if you're going to trade, you better get used to the language. So, once again, I have another video that talks about the yellow zones, but you can use these zones as well as the yellow zones and just take signals that occur, like here, at these areas, right? We got a positive divergence right here. We've got positive 10 on the COT and a negative delta. And the point of control is outside the unchanged candle, the orange candle. Notice how the inflection of my voice went up there? Because that's something you need to pay attention to. All right? So that's all I really wanted to count on. And remember, 15 minutes. Okay? Just on hogs, because this is a slower market. But you can use these fast market conditions in any market, whether it be wheat or soybeans or diammonium phosphate, which I highly recommend you don't trade, platinum, palladium, whatever, silver, gold, copper. It doesn't matter. It doesn't matter. And let me close with this. If you're trading stocks on a day trading kind of thing or a position trading kind of thing, stop. Okay, because commodities, and I know that you've probably been brought up to think, oh, commodities are risky. They are much less risky than stocks. Tell me something. With the hogs or the corn or the beans or the coffee or any of these markets, cotton, sugar, can they fudge the books, or are the crops the crops? The crops are the crops. You can't be baking in any of this crap they do on their balance sheets with stocks, can you? All right, that's it for the lecture. That's it for this video. Watch it again if you're brave. I'll talk to you guys later. Maybe.